The S&P 500 is rising, but if the dollar is falling at the same time, are those gains actually real? A rising market does not always mean rising value, especially when the currency behind it is weakening. To understand this, use a simple three-layer model to interpret returns. First is nominal, the quoted change you see in a US dollar index price with no adjustments. Second is real, what remains after inflation reduces purchasing power. Third is foreign exchange adjusted, what a non-dollar investor experiences after converting back into a home currency. A falling dollar can make dollar gains look stronger than actual global purchasing power gains. This isn't just theory. We've seen this dynamic before. In the early 2000s, U.S. stocks appeared to recover in dollar terms while the dollar weakened at the same time. For an overseas investor, that combination can disappoint. Even if the index rises in dollars, converting back to the home currency can shrink what is kept. Returns come from two moving parts: asset performance and the exchange rate. Let's put numbers on it. Suppose the index rises 10% in dollars, while the dollar falls 8% versus your home currency. Your effective gain is closer to plus 2% before inflation, because the currency move offsets part of the market gain. Now add inflation. If inflation is 3%, that gain turns negative in real purchasing power terms. Zooming out, this pattern can overlap with falling real yields. That environment may support equity valuations while the currency weakens. It is not a guaranteed relationship, but it's one investors watch closely. Multinationals with significant foreign revenue can benefit from a weaker dollar through translation effects, while more domestic firms may see less of that tailwind. The risk is mistaking currency-driven gains for broad economic strength. So what is the true value of the rise? It depends on the layer you measure. Gains can look strong in nominal terms, but shrink after inflation or currency translation. Replace the same index in euros or gold, and the story can change. Markets are quoted in dollars, but value is not defined by them. So are S&P 500 gains real in a falling dollar environment? In nominal terms, yes, but after inflation and currency adjustment, they can be smaller or even negative. The key is simple. The unit you measure with shapes the result. Measure what you are trying to protect.